Eddie, can you hear me? Hello, can you hear me?
Yeah, I can hear you. I can hear you. Okay, Prince, we can hear you. Can you hear us? Prince, can you hear us? Hey, I can't. Can you hear us?
So when I speak on my phone, I think the laptop is too noisy.
You said?
Can you hear me?
Yeah, I can hear you now.
Okay. I'm going to say, can you hear me again? And tell me if you can hear me, okay? So in the next 3 seconds, I'll ask, can you hear me again, okay?
Okay. Nah.
Okay. I think my laptop still has that problem, so don't worry. I'll use a phone to speak while my face show with the laptop. Can you please make me the host so I can just get the background of everything?
Okay. All right. I'm coming now.
Okay, great.
Prince, can you hear us?
Yes, I can hear you.
Okay. All right. I want to try playing the videos to see if it will work. So just a second.
Okay, go ahead.
You disabled the screen sharing.
It's because I'm sharing my screen. Let me just unshare it. Okay.
Where do I
Okay, go ahead. You can do it. You don't know.
Okay. Do you see the how do you call it?
Yeah, I see
Okay.
it. Yeah, I see it.
Okay. All right. Sure. I'm coming. How do I even let this? Okay. All right. Sure.
I can hear it. I can
Okay.
hear it.
Okay. Then that's fine. Um. Nice. This line can mute.
It's not even requesting for the link.
No. But the link is you have to register first. So
And we'll have to one day to register before the game. This laptop.
You put it again. What? Okay. Eh,
What was the problem?
Did I copy the link, the WhatsApp group link?
Like you want to insert it into the page.
So the link to
The
join.
chat.
Mhm.
I'm not sure the new people when they come they see it. So as and when they come,
Mm.
copy it.
Hello, everyone. Thank you so much for joining us today, and thank you for your time. Today, once more, we are about to talk about some great financial ideas, some great financial ways we can save our money and make even additional money in doing our savings. We are very happy to have Desmond Bredu with us once again. Desmond will introduce himself, tell us a little about himself. He's been on our programs for a couple of time, and we've had such wonderful and insightful insights from him. We are glad to have him again. Hi, Desmond.
Hi, Prince. Can you see me clearly?
Very clear. Thank you so much for joining us today once more.
Thank you too for having me. Thank you. So should I proceed?
Desmond, yes, I mean, can you please share a little bit about yourself for our new participant to know about you?
Okay, that's fine. So my name is Desmond Bredu, and I'm an investment. I'm getting feedback from someone. I don't know who that is. Okay, so my name is Desmond Bredu, as I'm rightly mentioned, and I'm an investment professional with Stanley Ghana Limited, now called Stanbic Investment Management Services. And I'm a chartered accountant as well as a financial literacy coach. So basically, I talk to people about financial literacy, help them make better financial decisions. And also, I take financial literacy personal. I take it like really keen about it. So basically, that's a little bit of what I do. So when Edward said we should come back and talk to people about investment, I was like, let's do it. So basically, that's what I've been doing for the past 5 to 6 years now. And I hope you can still hear me. And today I'm excited to talk to you about the various investment options that are available in Ghana. To be probably a really brief presentation, because I would prefer that people ask me the questions that are suited to their scenarios. Then we can, based on that, in quote, advise them on what to do, because I think that would be a more practical approach to the whole thing. So I just share my screen, but I'll just take the slides to take you to some slides I have. I don't know if, Prince, you can make me a host so that I can also share my screen. Thanks. Awesome. Thank you, Prince.
Yeah.
Okay. Okay. So today, I'll be talking to you about investment, and it's quite interesting when I always talk about investment, because I think it's one of the easiest as well as the most difficult topics to talk about, basically because investment is sacrifice. You're telling people to part away with their money for a given time or a given period, but ultimately it's for their benefit, and that's why I'm really passionate to talk to people about investment. So like I mentioned, I'll be discussing with you the various options that are available for you. Then, most importantly, your feedback and questions that will help me determine what's your best interest for the way forward. And again, like the topic said, we're talking about the traditional ones in Ghana. Now, before I zoom into investment in the first place, right? Let me share the story that I always share. There was this conference, and the speaker asked people, how many of you felt that if currently, how many of you felt that you're not okay or you're not comfortable with your salary? And guess what? Everybody put up their hands. Then he said that, okay, if your current salaries was doubled, would you live a more comfortable life? guess what? Everybody put up their hands. So he said that, okay, 5 people come in front, give them a piece of paper. Then he told them to write how much they earned on the paper. The first person wrote 500 CDs, the second person 1,005, someone wrote 5,000, then the fifth person wrote 25,000 Ghana CDs. So he said that, I mean, the person who was earning 500 CDs says he wants to earn 1,000 CDs before he was comfortable. Somebody's already on 1,005, but he says he's not comfortable. And even worse of all, someone was on 25,000 Ghana CDs, and he still says he's not comfortable. This is just to say that no matter where we are in life, we need to probably appreciate where we are and strive to do better. At the same time, we need to take time to also try to live or manage what we have and also make room for investment. And I'm hoping that by the end of this presentation, you get something little that you can use to work with. No matter how small your sum may seem, there's something in store for you tonight. Now, before I talk about the investment options, this is something that I really, really love to discuss. How do you know your preferred option? Because I'm going to go through about 5 or 6 different investments. But how do you know which of them is really important or would suit your needs? And I have 3 things for you, and I'll break it down. Now, the first thing that I want to share with you is that you need to define your goals and objectives. What do I mean by that? You need to determine in advance why I am investing. Because firstly, if you don't do that, you probably end up spending your money that you're investing. But if you have a defined goal that, okay, Desmond, I'm investing for my retirement, I'm investing for a property, I'm investing for travel or emergency, then we can say that, okay, now looking at the options available, this is what will best help you meet your goals. So getting your goals and objectives right is the very, very first step to invest. For example, you can say that, okay, Desmond, I have school fees to pay in the next 6 months, but I have the money now. What kind of investments can I do so that in the next 6 months, I'll get my school fees back? I wouldn't tell you to go and put your money in stocks, even though stocks are an investment, because it won't help you meet your goals and objectives. And that's why knowing your goals and objectives is so important. Now, the second thing that everybody needs to know is how much are you willing to lose? That is your risk appetite. If today I tell you that, okay, the money that you brought, it has lost 50% in its value, what are you going to do? Are you going to turn around and slap me and beat me up? Are you going to say, oh, Desmond, let me bring more money? Or are you going to say, oh, I'm cool, just let it be? So your reaction to if you lose money, how is it going to be? Broadly, there are 4 categories, but sometimes it's affected by maybe our personal, who we are personally. You know, there are some people who are naturally risk averse. Whatever you do, they don't want any form of risk. And the other people on the other side of the spectrum who are aggressive risk takers. They, by nature, they want to probe and know what they can do further and do more. And other people who are also risk neutral and other people are risk tolerant. I mean, they appreciate some form of risk. And I'm sure most people fall within the risk neutral to the risk tolerant space. But again, know yourself. Let me point out some few things that should help you determine your risk tolerance level. Firstly, your age. If you are young, you should probably be in a better position to take on more risk than if you are older. The second thing is your health. Please, I beg you. In Spanish, we say por favor, please. If you're not physically fit or your health-wise you're not good, I beg you, look for risk-averse investments to do. Don't go for high-risk investment. Before the following day, the something would catch you because you see that your investment is how do you call it? It's this thing. Before you realize the money is gone, and before you realize you don't know what to do next. Then finally, you need to talk about whether you're putting your eggs in one basket, due diligence, knowing where you're investing your money in, asking the right questions. And finally, for me, I always choose safety over high unsustainable returns. So basically, that is it for what you need to know before you start investing. So once, give me a second, please. Okay. So once you know about all of these things, then we can zoom in into what you can then choose your investment that to do. So the very first investment that I'll talk about is so these are the investment options that are available in Ghana: fixed deposits, treasury bills, bonds, notes, stocks, equities, unit trust, and mutual funds, as well as sorry, 1 second. Guys, can you hear me?
Yes, we can hear you very clear.
Okay. Get some feedback that maybe. Okay. Just a second. Okay. So these are some of the things that we'll be going through, but I'll probably skim through some of them. Okay. So the very first one that's probably most common in Ghana is shares. And shares are simply unit ownership in a company. So if you buy shares, you are entitled to certain rights in Ghana. Now, the first time that a company issues its shares to the public is what we call an IPO. And shares have a characteristic of being volatile, meaning that the prices change on a daily basis due to information basically, and also due to demand and supply anyways. So today the price can be worth 1 cedi, tomorrow it can be 150 pesos, the following day can be 75 pesos, other things being equal. And that's how volatile the stock market is. But you need to know that, I mean, once you appreciate that, okay, I'm a risk tolerant person, then I can actually go in for shares or stock. And I'm sure most people know about how the stock market operates in Ghana. But I think that if you want to, I mean, what the next leg of things that I can give you is, if you are thinking of shares, who should be thinking of shares? For me, the first people that should think of shares are long-term investors, risk takers, and that's the young people. Because again, like I mentioned, if you have a long-term horizon, we can be able to recoup some things if the stock market doesn't do well in the short term. Secondly, what are the benefits if you invest in shares? You get dividends, and dividends are simply payments that the institution or the company investing pays you on a regular basis, maybe yearly. But I mean, sometimes they're not obliged to pay you dividends. And secondly, you get capital gains. Now, capital gains is simply if let's say you buy a stock for 1 cedi and the price moves to 1 cedi 20 pesos, the difference between the 1 cedi 20% and the 1 cedi is your capital gain. Another great thing if you want to invest in stocks is also for diversification purposes. That is not putting all your eggs in one basket. And remember that the stock market usually has an upside that no other asset class can match. So if you want to also focus on shares, these are some of the benefits that you may get. Another thing that I need to also talk to you about is what are the risks involved in if you want to invest in shares. Now, if the company collapses, you lose your investment, and we can attest the fact of when UT Bank collapsed, people who invested in UT, I don't know if they've gotten their money back or not. And also, because of the volatility, there's a potential decline in your investment. So maybe today you have 1,000 cedis in there. The following day you go in and it's left with only 500 Ghana cedis. It's possible. So people should be aware of the upside as well as the downside. Now, I'll move to, again, like I mentioned, the most important bit about this conversation is hearing from you what your individual preferences are. Then we can better suit the conversation to it. Now, the second bit is the treasury bills, and treasury bills are simply discounted. Edward, I think, or Francis,
I don't think we can hear you.
Can you hear me? I don't know if my
Yes,
line is still clear.
I can hear you.
I don't think we can hear you.
Okay.
I hear you.
Okay, so I was saying that then at the end of the presentation, then we'll ask the questions. I saw someone raise their hand, if that's okay. Okay, so as I was saying,
I can hear you.
all right. So as I was saying, treasury bills are simply discounted instruments issued by the government or a statutory agency. And in finance, we usually term them as risk-free, basically because the chances of default is very, very low. Worst case scenario, if the government needs money, they can print money and they can also use that to pay your T-bill. Why do you refer to as discounted? This is because they pay you, or you pay a lower consideration or cost, and you get the face value of maturity. Let me break it down to math. Now, if you want to buy 1,000 cedi worth of T-bill, it's likely that the bank will debit you based on the interest rate, let's say 970 Ghana cedis. And at the end of the 3 months or at the end of the 6 months, they will pay you the 1,000 cedis back. And that's what we call discounted. You pay less and you get more on maturity. Now, usually the interest rate, the days or the tenor is quoted in 3 months, 6 months, or 1 year. So you have 91 days, 182 days, or 364 days. Now, another thing you should note that we can't buy directly from the Bank of Ghana or the central bank. So what happens is The central bank sells it to the bank, and now the bank will sell it to us. And that's what we call primary auction. The first instance where the Bank of Ghana is selling to the banks, we call it a primary auction. Once the banks are selling to us individual investors, we call it the secondary market. Now here's the catch. The central bank can sell it to the commercial banks at say 14%. But the banks are there to also make profit. So if they're selling it to you, they can also sell it to you at say 13%. And that's their margin for their investment in quote. Another thing people should note is that if you see on the public central bank, the BOG website, that T-bills are 14%, that 14% is for the whole year. So if you go in for 6 months, effectively you are getting say 7% because it's 14% divided by 2. I had this story where someone came to me that this one, they've cheated me. I was supposed to get 14%, but I'm not getting that. Then I explained to you that this is the particular reason, because that 14% is for a whole year, not for the 6 months. So you should probably keep tabs of that. Now, if you're thinking of, should you think of T-bills? The first people who should think of T-bills are short-term investors, or if you're risk averse, or people who are probably on pension. For me, I always say that you don't play with pensioners' money. If you are people on pension, just put your money in T-bills, and when the money is due, they can get their money back and go their way. Basically, also the health factor as well too. What are the benefits of having a T-bill? It's risk-free. It's a great tool if you want to usually guard against inflation, because mostly the rate is above the inflation rate. So instead of keeping money in your susu box or a bank account, you can just invest in a T-bill, and most often than not, it will beat the inflation mark for you. So you don't really lose value. And again, it's a good way to diversify. But what are the downsides? Because I don't call it risk per se. What are the downsides? Now, usually the T-bill rates have a lower interest rate than most of the asset classes. And that's because it's risk-free. So the government is saying that, worst case scenario, I'm paying you something. So they usually don't give you so much interest on that. Now, we go to the elder brother or the older brother of T-bills, which I call, bond-term notes. I call them older brother because they are just the same thing, just that they are much more long dated in nature. So duration of 2 years and above. But the thing about bonds and notes is that they pay you interest every 6 months, and the interest is called coupons. Now, I'll give an example of it, and I'll show you a practical example. But the thing is, so if let's say, let me just go straight into the example, because that will make it much more practical. Now, this is an example I gave. Let's say on 21st September last year, the government issued, in fact, this is just an actual one. The government issued a 3-year bond at 90% coupon, and the coupon are the interest rate that they pay. And you went to a bank and you bought, say, 5,000 cedis worth of the bond. What will happen is, if you look at the calculation here, every 6 months, the Bank of Ghana or the bank will pay you 19% of the 5,000 cedis divided by 2. So at every 6 months, you get 475 Ghana cedis as your interest. So they'll pay you like this every 6 months till 18 September, when they'll pay you your last coupon and pay you your principal back. And that's how bonds work. So if you want to have that kind of regular incomes coming in, say every 6 months, you can think about having a bond. But another thing here is that if you go and buy a bond, the coupon can be 19%, but the commercial bank won't sell it to you at 19%. They'll sell it to you probably maybe at 16% yield, and yield is just the interest in or effective rate to maturity. I don't think that you need to worry yourself ahead about that. But even though you get the coupon of 19%, your effective interest would probably say 16% or 17%. And if you want, I'll take you through, maybe if you have any further questions, I'll just take you through that later on. But that's how basically bonds work. Who should think about bonds? Medium to long-term investors, risk-tolerant investors, also investors who want regular income. They should also think about bonds because they pay you semi-annual coupons. What are the benefits? Again, the rate of default is low if they're issued by the government. It offers you a better interest than a T-bill. You can get a very good rate for a very long time, irrespective of, guys, please hold on a second for me, please. Just a second for me. sorry guys. So okay, so who should invest in bonds? And I was talking about the benefits. The rate of default is low if it's issued by the government. You get a better rate than a T-bill, and also you can get to lock in some good rates for a very long time. If the coupon is 19% for the next 3 years, that's what you'll be getting for that period. But the downside is if interest rates move against you, then you also have trouble, because if, let's say, you have a 19% coupon bond and interest rates in the country go so high that now the same 3-year bond, they're issuing it for 25%, it means that you'll be losing out. So that uncertainty is also there. And sometimes if you want to sell your bond, it becomes difficult for someone to buy it unless you take some shave off whatever you are selling it for. That's there. But you remember that I talked about interest to maturity. It's what we call the yield. So the yield on each bond is dependent on, one, the coupon rate, the tenor to maturity, and the current interest rate. So here's a catch I need to give you guys. Sometimes there could be a bond which has, say, 6 months to maturity, which is almost the same as buying a 6 months T-bill. But that bond will give you a better yield than if you bought the T-bill. So for me, I always encourage people that if you want to buy a T-bill, rather ask the bank, can I get a short-dated bond which has, let's say, a 3 months to maturity or 6 months to maturity? And you are likely to get a better deal than if you bought a T-bill of the same tenor or period. So people should take note of that. Then I'll move to the fourth thing, which is fixed deposit. Now, fixed deposits are quite simple. Now, some places they refer to as term deposit or certificate of deposit. And it usually employs a simple interest calculation, which is the principal times time times rate time divided by 365. But one thing you should note is that the interest rate applicable usually depends on the institution you are investing with, whether it's a non-bank financial institution or it's a bank. I recommend you do it with a bank, but usually the banks give you a much lower interest than if you bought from a non-bank financial institution. That's also there. Now, this is an example of if you bought a fixed deposit, how it's going to be like. So let's say you bought a 6 month fixed deposit. Look here, you see, instead of the T-bill where you pay less and get more maturity, for this particular one, they'll debit you the actual amount, 5,000 cedis. Then they do the simple interest calculation on the 5,000. So if you look here, it's 5,000 times the tenor, 182, times the interest rate divided by 365. So at the end of the 6 months, they'll give you the 5,000 cedis plus your interest that you've earned, which is 522. This is 299.18. And this is the example that I gave. So 6 months, from 2nd January to 3rd July, you'll be getting your 5299.18 back. As simple as that. But in Ghana, sometimes it's difficult because the fixed deposits for the banks are sometimes even lesser than the T-bill rate, which beats my mind. So I even wonder why people go in for fixed deposits anyways, unless it's with a non-bank financial institution. Yeah. Now, who should give me a second, please. Sorry about that. Sorry about that again. Who should invest in fixed deposits? Again, it's short to medium-term investors who are risk tolerant, and I mean, you need to appreciate some form of risk, especially if you want to invest in a non-bank financial institution. It's really important. Now, what are the benefits? Again, you get capital appreciation because the 5,000 grows to 5,291. But what are the downside? Sometimes if you want to sell your fixed deposits, there are penalty charges or the breakage cost. And sometimes it's also not flexible if you want to top up as well. And for most often than not, the non-bank financial institution, once the company closes down, you are likely to lose your investment, and that is that. Now, that's the fourth thing that I've discussed with you. Now, the main investment opportunity that I think that many people, especially for us young people, should consider in Ghana is the unit trust and mutual funds. And I'll spend some time here because that's what I think is really important. Because ask yourself, again, if you, and I mentioned initially, if you have 5,000 cedis and you went to a bank to buy a fixed deposit, they won't even look at your face. A friend of mine called me, I think about 3 months ago. He had 100,000 Ghana cedis. He went to a bank to buy fixed deposit. They were giving him 12%. I mean, T-bills are also not any better. So that's where unit trust and mutual funds come in. Now, unit trust and mutual funds is simply where a pool of investors come together and a fund manager is appointed, and the fund manager pulls their monies together and invest on their behalf. Now, the only difference between a unit trust and mutual fund is just the legal structure. You don't need to wear your head about that. But what happens is, once you, let's say you have 100 people. Now, if everybody is bringing 100 cities, 100 cities, 100 cities, and we have 10,000 Ghana cities, that's supposed to even command a better interest than if you sent your own 100 cities to a bank to buy a fixed deposit. In fact, they'll tell you to put this in a savings account. But with the unit trust and mutual funds, regardless of the amount you invest, everybody earns the same percentage return, regardless of the amount you invested. So I can have 100,000 Ghana cedis in there. You can have 10 Ghana cedis in there, but all of us are enjoying the same percentage return. And I'll show you an example. Now, in Ghana, we are even blessed to have 5 different types. So it will speak to my very initial point that regardless of your investment opportunity or the investment goal, there's some form of unit trust or mutual funds that can help you achieve your goal. One, we have the money market type. Now, the money market type usually invest in short-term securities like cocoa papers, like treasury bills, like fixed deposits. And usually the maturity is less than 13 months. Now, we have the fixed income type, which invest in long-term securities like the government bonds, corporate bonds. They are there. Now, usually they are above 1 year. So, example, if you want a long-term investment and you don't want to invest in a bond, you can invest in a fixed income unit trust. Now, we have also the equity CIS. Again, if you don't want to invest in one particular stock, you can join an equity CIS, and they invest in a pool of stocks on your behalf. Now, we do have the balance funds. As the name suggests, they are a collection of both or all the other types, the money market, the fixed income, and the equity CIS. And in Ghana, we also have the real estate investments trust. Now, they invest in mainly real estate, land. So for those of us interested in those particular things, you can invest in the real estate investments trust. But in Ghana, we only have one as of now, which is the Republic Bank Real Estate Investments Trust. So again, just to speak back to my initial point, whatever your investment goal or need may be, there's a particular unit trust that can help you achieve this goal. And a good thing to know is that, let me just move to the benefit. One, regardless of what you invest in, you get a very good interest rate. Last year, for most of them, for the money market, most of them were returning about 16%, while T-bills around 14%. For the fixed income, most of them were above 17, 17.5, 18%, which is really good. A good thing again is that you can get liquidity, in that you can get to withdraw part. I mean, it's flexible in that sense. You can withdraw part, make monthly contributions. So again, it's really good for us young people who probably are not earning so much, but are salaried workers and want to do some monthly form of investment. Another thing is, you don't need so much money to start investing in a unit trust or mutual fund. For most on the market, you only need 50 Ghana cedis to start. And I think that's a great opportunity. Imagine you have 50 Ghana cedis and you're enjoying 16% interest. I think it's a no-brainer for many of us. And also, you get a professional to manage the money on your behalf. Now, another thing that I should really notice that now, because it's a large pool of resources, usually the fund manager is more qualified to manage the money for us, and they also try to diversify the funds on our behalf. Now, what are the downsides? Now, per the SEC rules, no fund manager or no investment house is supposed to guarantee you any form of return. So the returns are fluctuating, in that you can't know a specific return that you'll be getting at the end of the period. Now, usually for the fixed income and also for the equity CIS, they will have a lock-in period that, okay, it's 2 years or for 7 years. Don't withdraw. If you want to withdraw, there's some charges on it. And that's also like a downside, let me put it that way. And you also don't have any direct control in what the fund manager invests in. They, based on their expertise, invest in what they think will be of benefit to the fund. So that lack of control is also there. And we've seen in this country where some fund managers have collapsed, and it's a bit of challenge retrieving your funds. And that's some of the downside I also need to point out. But all in all, for me, I think it is one of the best opportunities for us to start investing based on what I've already discussed with you. Now, these are other forms of investment, but I won't go through them. But I decided to do a risk and reward ladder. What I'm showing here is that, again, I spoke about the risk categorization. So based on who you are, you need to know where you fall in this risk reward ladder, because other things being equal, they had a risk, they had the expected return. Expected because the return may actually never materialize. So we need to be really careful in saying those words. So again, depending on your risk categorization, you know where to fall in. Now, I wanted to not just talk about investment, but investing now, because time value of money plays a critical role. Now, there are two friends who decided to start investing money 10 years ago, but Abena started to invest from the get-go, 100 cities every single month for the next 10 years. And for this calculation, I assumed a 15% compounded interest. So for each month, Abena deposited 100 cedis for the next 10 years. At the end of the 10th year, she should have invested 12,000 Ghana cedis. But her return is 27,000, or her total investment will be worth 27,000 Ghana cedis. But Daniel, on the other hand, waited till year 5, and he did 200 cedis every single month. At the end of the 5th year, he too would have invested 12,000 Ghana cedis, but his return is only 17,000 Ghana cedis. So what I mean to say that you and somebody can invest the same amount of money, but if you start early, you are better positioned to get more money than the other person. Look at this math, a 10,000 Ghana cedis difference, which is really, really, really important. Now, there's this popular Chinese proverb that I usually want to say that the best time to plant a tree was 20 years ago, but the second best time is today. And again, I've mentioned about unit trust. You don't need so much money to start investing. 50 Ghana cedis, 100 Ghana cedis, you can start looking at unit trust and mutual funds. Now, this is an actual representation. I picked the average return of EDC fixed income fund, of Data Bank M fund, and of Stanley Income Fund for the past 6 years. And I assume that if you invested 5,000 cedis as at 1st January 2015, how would your money have grown on average if you invested in this fund? And on average, your money would have grown from 5,000 Ghana cedis as at 1st January 2015 to 15,000 cedis as at the end of last year. So this is just to tell you that we need to start investing, because these are actual returns that people are making in Ghana. And we don't need so much money to start investing. With as little as we can start investing. Let me end by saying that everybody, right, wish that they get rich, and everybody does. But only a few of us know that you need a definite plan. And one of the key plans you need to know is about investing. And investing doesn't have to, you don't have to wait till you get the huge sum before you start investing. Please, let's start thinking of investing now. Let's start focusing on our retirement. Let's start focusing on the long term. Let's not just start whatever money we get, we spend everything. Let's leave some room for investment in our daily lives. No matter how small or how meager our money is, let's leave room that we get some money saved up for the future. And hopefully we can get some good returns and enjoy our retirement in the best possible way. That's it. And I've described all of these things on my YouTube channel. So if you have time, you can just jump on my YouTube channel, have a look at it, and subscribe if you are new, and learn a thing or two for yourself. So again, I'll pause here, and if you have any questions, I think I start within my 30 minutes time. If you have any questions, I'll take it, then we can progress from here. Thank you.
Thank you, Desmond. We are very grateful for the insight that you've shown. There's so much to learn here. I think we have 10 more minutes.
Yeah.
If you have a question, please, you can just type it. I could read it to Desmond for him to answer. You can raise up your hand. We give you the opportunity to talk. Yeah. So we have Sharif Kome. Sharif, please go ahead.
All right, thank you very much for the opportunity. And in his presentation, I think I saw a part where he was trying to rate the risk ratio. And I saw cryptocurrency, forex trading, and all that.
Yeah.
Recently people keep making noise about digital currency. So I don't know if you could throw more light about cryptocurrency and forex trading. Thank you.
Okay, awesome. So let me start with the cryptocurrencies. Now, what I have noticed is that many people in Ghana, especially, want to view crypto as a get rich quick scheme. And that's one thing I really want to hammer on, that it is not. If you want to understand, I mean, I've actually done a video on that on cryptos, and it's on my YouTube channel as well. But I think that people should understand what Bitcoin or cryptocurrency really is about before they jump in. They shouldn't see it as a get rich quick scheme, because it's highly, highly volatile. And sometimes we are competing against, also again in forex trading too, we are competing against the big guys who have huge or sophisticated machines to be able to predict things more than we do. And again, let me even give this example. There was this website I jumped on for forex trading, and it was telling me that 85% of people who invest in forex or trade forex lose their capital. But in Ghana, it's thrown as if it's like once you get in, you'll be making more money, and that's not the case. So for me, that is one thing that I always want to hammer on when I'm talking about cryptocurrencies and forex trading, that people should really understand whatever they are into. If you want to trade forex, for me, I suggest that you take time to actually understudy somebody, not just jump in that, okay, the person says, I'm giving me this particular code, so I'm going to start trading with it. You will lose money. And I've seen people who have lost a lot of money trading forex, and it's not the best of things. So one, understand whatever you want to invest in, be it forex trading or cryptocurrencies. Ask questions, take time, and again, take time to really appreciate the level of risk, because these things are highly, highly volatile. If you're not a risk taker, I beg you, please stay clear of these particular things. Thank you.
Yeah, and I think this is also a great opportunity for us. If you are here, I mean, tell a friend and also get ready. We'll look at having a session mainly on cryptocurrency
Yeah.
for all of you. A couple of questions coming in. Emmanuel Bona says, how often are corporate bonds issued in Ghana?
So usually the corporate bonds are issued to more like institutional investors, right? Not to individual guys. Even though if probably you are a high net worth client, you can get one of the institutions to sell some to you. But usually they are issued to the 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 big guns or the big institutions in Ghana. In fact, actually last last week on 17th or so, Bayport issued a 5-year, no, Israel issued a 6-year note, subordinated note. So they are issued, but usually it's the corporate institutions. Yeah.
Okay. If you haven't followed us yet, follow us on social media. We're on Facebook, we are on Twitter, we are on Instagram, LinkedIn, African Observations. So kindly do follow us. We'll share a couple more of the things that Desmond have shared. Some are the insight that we've picked up from this webinar. So you get to see more, you can ask more questions there, and then we can get you the answers that you need. Nana Kojo Jane Fee says, can you throw more light on the treasury bill investment? Does it mean that a 3-month treasury bill bought at 12.9% doesn't actually guarantee a 12.9 at the end of the 3 months?
Exactly, because note that the 12.9% is per annum. Let me just see if I can just show you how the Bank of Ghana website looks like. It tells you that it's quoted per annum. So if it's for 3 months, it's the 12.9% divided by 4. That's your effective rate that you are getting. I don't know if it's as simple as that for the person. It doesn't guarantee that 12.5%. No, it guarantees you a 4.3%, no, a 3.4%, something like that. Yes. Yeah.
But why is this so? Why can't you get because
So
every time you go to buy something like this, you have allocated a certain amount, and at the you go home and you feel like you can just calculate this and get your money. And it's
so
lesser, and it starts now explaining. Another question that you should also answer, apart from is it like that? I mean, why can't banks just tell us things the way it is and not so much floating around them?
So the truth of the matter is, right, that's standard procedure. It will tell you that the rate is per annum. But many people, because they don't understand what it is, they go and they ask what's the rate, say, oh, 12%. But that 12% is per annum. That's why I really hammered on it that if you go for a T-bill and it shows you that it's 12%, that 12% is for the whole year. So if it's 3 months, divided by 4. So maybe next time that you are now aware of this, if you go to a bank and you want to buy a T-bill, ask them, so, okay, what is the rate per annum? Then you can do the math. But again, because it's a discounted instrument, it's something a bit difficult for you to do the math. I have an Excel sheet that you can use to also calculate the things on your own. But it's more practical and more technical for many people. That's why the banks usually don't tell you all of these things. But that is how it's supposed to be. They'll quote the rate for you per annum. Yeah.
Okay, Daniel, Alpha Bonnie, sorry, would you like to speak or I just read up what you've written? So he wants to know where he can find
Okay.
mutual
Funds. The mutual funds are unit trust. So
yes
for
to
me,
invest in.
I work with Stanley, right, or Stanbic Investment Management Service. So we have a fixed income unit trust and a money market unit trust. What was he saying?
So he's saying he invested in M funds last year and lost some good part of his money.
No.
If
Then
he wants to
it's
know
not.
if M funds are invested in money markets and how is it possible to lose money?
Then he didn't invest in the M fund, the data bank M fund, right? Because the data bank is a fixed income fund and they don't have any equity component. So there's no loss of value in there. Maybe he invested in the EPAC or something that has a potential of a decline. Last year, the M fund did, I think, 18.06%. So that's not a decline. It's actually an increase. So you won't lose if you invest in a fixed income fund. But if you invested in a balanced fund or an equity fund, then there's a potential for you to actually lose some money. But for the data bank M fund, no, last year was actually again 18.06, which I'm really, really sure about. So that's not it. Again, if you want to look at some other M funds, some other unit trust and mutual funds, there's Stanley where I work, there's Data Bank, there's EDC, there's Republic Bank, there is also Fidelity or so, yes. But if you want to come straight to us, you can come to Stanley Ben. And I think, Edward, I'll just leave my email. If anything, if you want to reach out to me, you can just send me an email and I'll get someone to assist you open an account with Stanley. Like I said, at Stanley, we have two mutual funds, a fixed income one and a money market one. So depending on what you want to do, we can get to invest in any of them. I just shared my email. It's askdesmondbredu@gmail.com. Just copy it and send me an email that Desmond, can I get someone to reach out to me for the unit trust or mutual fund, or even get someone to explain what the Stanley model is, and we can have a conversation on that.
Robert Kwamin says, so for an individual who is looking to invest between mid-term to long-term monthly basis, what would you advise?
So the medium term to long term, I'd advise you split your money into two, one for the money market and one for the fixed income funds. Because sometimes you say medium term, but actually it could be a short term. Maybe your medium term could be like 6 months, and the fixed income fund usually it's like 2 years, like anything above 1 year basically. So for me, I advise people to split their monies into two, put some part in the money markets, put some part in their fixed income. If you're risk tolerant, you can put some part in an equity for the future or for the very long term as well. Yeah.
Great. I think this session has been very insightful.
Francis, let me also share.
Yeah.
So I've also done a video on unit trust and mutual fund. I just shared the link to my YouTube channel. Just hop on there, and I've explained each of the various types available in Ghana. Also in the description, I've stated where you can get to buy what type at, which will make it even much more easier if you want to buy. Also, alternatively to if you don't want my email, I'm very much active on Twitter. So you can just send me a DM on Twitter. I'll just send my Twitter profile. It's at Palen77. Just send me a DM and we can have some conversation about it too. Thanks.
Thank you. Thank you. I think time is fast spent. We are 2 minutes into the time that we scheduled. Okay, thank you very much. We have a WhatsApp group that we also share daily financial feedbacks, updates. You have questions, you can ask. And we are going to share the group link in the chat. You can join us and get to learn more about your finances. I think we are at a place where we really need to have so much focus on the little that we have, even the more that we have, so that we can make good investments moving forward. Okay, I'll just give the last chance to Emmanuel Bona to speak, ask his question, and then I think we'll wrap up from there. Emmanuel. Okay, I think his type his question says, does investing in stock yield so much in Ghana? I follow the prices of stocks for a few companies, and it seems relatively the same over a year. Desmond, what do you have to say about this?
Fantastic question. So unfortunately, right, in Ghana, our stock market is not that price sensitive, in that it doesn't really change or doesn't react to information that much. So unfortunately, and our stock market has not been doing well for some time now. So yes, I agree with Emmanuel's assertion that yes, it doesn't seem to do quite well. But for me, I also think that we should view stocks as very long-term investments. So over the long term, it can get some really good returns from it. But I think his assertion is quite spot on. Yeah. But even amidst all of these things, there's some really good stocks in there that can give you some really great returns. And like the banking stocks, like the telco stocks, which are really good as well. So even if the whole community is not doing well, some portions of it are also doing well. Yeah, thanks.
Thank you so much. We've seen a couple of you joining our WhatsApp group already. Thank you so much. We've shared details of it in the chat. If you are here, just click on the chat section and you see our WhatsApp community. We've shared our social media handles too. We are working on some great products coming up on AfriOps, African Observation. And if you want to be the first to have a feel of that, to share in the journey, so that years from now you can say that, hey, you were here when all this began. Please follow us, join our WhatsApp community, and then you can always have first-hand information on this. I think this has been an insightful day. We've learned so much. Look out for our next webinar coming on soon. So we have webinars, community events like this every end of the month, and we get to bring together all the people that matters, people that really understand the financial markets and systems in Ghana, and we get them to share with us all the things that we need to do to make our finances work better. Thank you so much for joining us. Like I said, some of the things that Desmond have said, we'll share on our social media pages. So just jump on to WhatsApp, jump on to Facebook, jump on to Twitter. If you're on LinkedIn too, we are there, African Observation. All these links have been shared. We appreciate your time. Thank you so much. Let's make this again another time. All the best in your finances.
Thank you. Have a great evening.
Thank you, Desmond. Thank you so much for joining us. We are very grateful.
Thank you.